So underneath the headline numbers, you sound a little bit more concerned, Drew.
I think it's right to be a little more concerned. I mean, typically what you want to see is you want to see the equity market behaving well. You want to see it going up, and you want to see treasury yields reflecting what the equity market is doing. And instead, we seem to be in a pattern where yields continue to decline. Things like gold, which I typically have never looked at, but it moves up. It's a sign that people are worried about something. And yields moving lower are a sign that people are worried about something. And so the equity market move up is kind of the outlier rather than actually what seems to be driving the behavior of the other two.
How much, though, do you think the bet right now is a binary one? We've talked with Jim Cramer a lot about it over the past couple of days, which is it's a vaccine bet. It's a binary bet that sometime this fall we're going to hear positive news about a vaccine in a meaningful way. Not necessarily that the vaccine is going to be available in the fall per se, but that maybe early 2021. And if you're not in the market when that moment, if you will, happens, that it's a lost moment.
Well, I mean, but think of the other side of that bet. I actually don't think it's a binary bet in those terms. I actually think what we're seeing is something that has happened a few times in the past as well, which is the potential range of outcomes that could occur over the next 6 months in the U.S. economy is extraordinarily wide. It's very difficult to price them all, and it's very difficult for anyone who's trading, who's not an epidemiologist or not an expert on kind of how these things work, to actually figure out what the true odds of these things are. And so when people get overwhelmed by the number of outcomes, they tend to go into it's either a risk on time or it's a risk off time. And I think the behavior we're seeing today is a little bit of a tug of war between just a simple risk on and a simple risk off trade. And I think as we begin to see more nuance in how markets evolve.
Right.
Sorry.
Drew, how much, though, is, when you think about the multitude of possible outcomes here, you talked about a sort of 6-month timeline. Don't you think that most investors right now are looking at a 12-month timeline? They're thinking to themselves, okay, if we're sitting here in July 2021, what does the world look like? And part of that is a bet around a vaccine, and part of that is a bet around the economy. And while the third and fourth quarter may be particularly rougher than thus far, depending on whether there's more stimulus put into the system or not. I mean, that's the other thing. How much of this is a bet on stimulus into the system?
Well, I think some of the bet is on stimulus into the system. But I do think if we look, we are seeing some positive movements in the economy. They are not, though, what people had hoped for. So the idea of the V is gone. I think people have begun to understand that. You only have to look to China to see that it's just not happening. And that, what we've lost. And now it's time to kind of climb our way out and figure out how best to do it. So I think that was kind of the first shock to the system. The next shock, could be whether or not there's more stimulus or not. And if so, what does it look like? And I think that there's a lot of open questions about that. And because of the multitude of questions, it's just very difficult to get your head around, what things look like. If you look at most Wall Street estimates, they still have a very negative second quarter and a very strong third quarter. And I'm not sure that's exactly the way people should be thinking.